What are some passive income options out there? Here's the deal. I don't believe that passive income exists for everybody. It exists for people that have the money to go out and invest into a business, into something. So if you don't have money yet, go out and figure out how to raise your active income up and then come back to us. And what we do is here at the Passive Wealth Show is we help people that have already figured out how to make money, invest it safely and build their passive wealth so that one day they can have more passive income than what they had when they were actively working. So as far as the passive income opportunities that exist, there's really the best one, in my opinion, is real estate. There's not a whole lot else out there. And that's what's worked for me and my family. And that's what's blessed us. And that's what I know. So that's what I'm going to be able to share with you today. So there's, as you can imagine, there's way more types of deals, way more types of real estate than what we're going to be able to cover here in this video. Just to give you an idea of what some of the options are out there, let's take a look at this chart. So we have hotels, we have apartment complexes, retail, commercial, senior living, Airbnb vacation rentals, traditional rentals, duplexes and fourplexes when it comes to rentals, lease purchase deals when it comes to rentals. You can build to rent, you can build to sell, you can do some private lending, and you can do commercial office spaces and triple net leases as well. Ooh, okay. If you're newer to real estate, all this makes sense to me, but I've been investing for over 15 years and we've, as a team, done over 3,000 deals. This is a little overwhelming to you. Welcome to the club. You really should be a little bit overwhelmed. There's a lot of options over there. What I can tell you is that there's a couple key concepts to understand when it comes to investment risk in real estate. So there's buy and hold versus flipping and construction. Okay. So one of the first steps that you can do when you're assessing an investment opportunity in real estate is try and understand, is the strategy a long-term one, like just buying and holding on to real estate? Or is it a short-term one where there's apartment complex deals where you buy a rundown apartment complex, put $1 million into the apartment complex, fix it up, raise all the rents on all the tenants, and then once everything's been secured and solidified, once the value has been added, then they turn around and they resell it. So on that risk profile, there's a lot of unknowns on a deal like that. Like the construction has to go right. Well, construction raised 400% in COVID. And then if it takes a year to put the project together, or it takes 2 or 3 years, which is not uncommon depending on the size as well, when it gets to be 3 years down the road, you have to rely on it being a good economy and a good market to sell the property as well. So there's a lot of additional risk when it comes to a buy and flip model. And there's different structures like that all over the place. But anytime you buy it, fix it up, and then resell, you're going to add quite a bit of risk. And the reason I say that is if you compare that to buy and holds, in 2005, before the market crashed and dropped as much as it did, you could have bought real estate all day. And if you held on to it, flash forward to today, you'd be feeling really, really good about it because the market's higher than it was back in 2005. So when you look at a longer window, like a 30-year deal structure, well, the average price point was around $90,000 here. I invest out of St. Louis. Now the average price point is creeping around in the 280s to $290,000 price point. So when you look at it from that long of a scale, any sort of market fluctuations and ups and downs, like you completely take that out of the equation and it dramatically lowers the risk profile. So how do you evaluate all these options and figure out what's best for you? I mean, I think the first step is just to decide how much risk do you want to take on versus reward. That's a personal decision. I have other videos on this topic on fixed investments versus maximized returns and going for more of a volatile investment. I'm going to put the link of the video in the comments here on that. But like you have to just really understand that and then come up with what's best for you. All right. So what are some of the additional risks when it comes to investing into passive income real estate options? So I think key person risk is something to really very much consider. Are you investing into a structure that's a one-person show that it could be going great, and then what happens if that person gets hit by a bus? So that's something that you definitely need to be aware of and think through. The other thing is experience level. So Has the person that's running the show been investing for over 10 years, or are they on the newer side? How experienced are they, and do they have a track record of success, or are they more on the newer side? And that dramatically impacts the amount of risk that you have going into the investment. Construction, I know I already mentioned it, but construction is definitely one to weigh in on as well. How much control do you have over the entire process, or is there something like a COVID that could happen that could be a wild card that throws a wrench into the returns? So when it comes to real estate, location's also an important thing, and the market that you are investing in. Are they really low price properties, or are they in an A neighborhood or an upper class neighborhood, and all along the way? I think it's really important to understand the location and what sort of risk that could come from that. So the market of which you're investing in also has a lot of impact in real estate. The coasts typically go up a lot more and go down a lot more. They have a lot more swings, and the Midwest typically is a lot more steady eddy and predictable. And that impacts the strategy and the overall returns pretty dramatically. Okay, so I have two favorite types of real estate investments that I like to do passively. The first is private lending. And why private lending is so powerful is that you have two borrowers. You have the borrower that's taking the funds from the private lenders, and that's a real estate company, and they act as a middleman, and then they turn around and lend that money to a real estate investor that's looking to flip a property. So they're looking to buy it, fix it up, and then resell it. So what's nice about the structure is it's the real estate company's job to run a valuation on the property and to make sure that there's not more money given to the person, the end investor that's flipping the house, to make sure that you're not underwater on the amount of money given to what the property's worth. And if that investor that's flipping the property should run into a financial issue, the real estate company is the one that, depending on the structures that I've seen, that real estate company takes over that and takes care of that problem. And so that the private lender is able to just get the return that they were expecting, regardless of how that deal ends up turning out. So what's nice about it is not only do you have the first borrower that's flipping the house, you have the real estate company and how solid that real estate company is from a financial perspective as well. So when you add in those layers, it becomes a very safe, very predictable, and very secure investment. Something that I would call the equivalent as far as a lot of bond investments that a financial advisor will tell you to do. Only the returns are typically better. So I love that. And then at the end of the day, it's a tangible asset. Houses have four walls, they have a roof, there's a real world value. People have to have somewhere to live. So you're also taking yourself out and diversifying from the open stock market and the overall economy as a whole within this strategy. So that's the first strategy that I really love. And then the second strategy is buy and hold investing, particularly when it comes to single family residences, lease purchase deals. And what I love about lease purchase deals is that the tenant gets into a position of a homeowner. And if the toilet leaks, or if the roof leaks, or if some repairs are needed, it's the tenant's responsibility in a lease purchase deal to make all of those repairs. So they act as the homeowner. And then on the landlord side of things, it's the landlord turns into more of the position of being a bank, of being a lender on the property. So as you see, my favorite two strategies are really involved in being the bank and lending money on real estate deals. And these lease purchase deals and this private lending are by far my favorite too. And we've done over 3,000 deals. So I've done vacation rentals, I've done infills, we've bought land, you name it, we've probably tried it. And what I found about these two types for passive income is that they're the most predictable, the most reliable, crazy quality returns, and you're able to protect your wealth and generate a lot of passive income while you do it. So thanks a lot for tuning in. Make sure you check out our other content. I hope you have a great day.